world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. This week, we bring you the third installment of our Founder Sessions series, where we interview successful entrepreneurs about their founding journeys. Tom Blomfield is the founder and CEO of Monzo, one of the UK's leading digital banks, and is a serial entrepreneur. For Tom's full backstory, check out episode 17, and for an update on Monzo, check out episode 108, when we touched base with Tom and discussed the company's massive recent milestone, crossing the 1 million customer mark. If you haven't subscribed to our newsletter yet, please go to bankingthefuture.com and do. We've got some great stuff coming through over the next few months, and you'll want to stay tuned. Thanks to everyone who supported us on iTunes with ratings and reviews recently. We bumped up our numbers, and it's had a positive impact on our listenership. If you enjoyed today's episode, share it with a friend and retweet it on Twitter. Thank you very much for joining us today. Please welcome Tom Blomfield. Tom Blomfield, welcome to Rebank.
Thanks, Will. Glad to be here.
I'm fascinated by your founding story at Monzo, and indeed some of your previous experiences, which we covered, I think, the first time we connected. Mm-hmm. People can check that out in the back catalog. But I don't know. It would be interesting to talk a bit about the very early days of Monzo. We've connected with Hussein Kasayev on Fido, mm-hmm. and Michael Kent of Azimo to kind of chat with them about what they were thinking as they were setting out, how they built confidence around what they were doing, and at what point they started to see the market responding and drive forward with enthusiasm. So I don't know. First question: how confident were you that there was a feasible market opportunity when you started Monzo?
Not very, or rather, I think we had a very strong belief that banking was going to move to this hub and spoke model, and that you, rather than managing our money through these pretty analog old banks, we'd move to smart kind of platforms that would manage all our money. But what we weren't sure about was how we would make the first and second and third steps. The end goal was sort of in sight, or we could conceptualize it, but we didn't know how to get there. What would convince customers to open an account or to switch? We really had no idea, and that was the biggest unknown we were worried about. Yeah,
and how did you, I guess, get from whatever pub or bedroom or conference or whatever that you were first
gin bar called Ask for Janice.
There you go.
Smithfield Market. I recommend it.
So, how did you get from there to kind of the first steps of putting this into motion? It was, okay, this is the first thing we need to do, and we can do this with no money, or maybe the first thing we need to do is get a deck, call some people, raise some money, start building.
Yeah. So I'd previously taken a company through Y Combinator, and one of my co-founders, Jonas, had taken a separate company also through Y Combinator. And one of their they kind of deal in mantras and heuristics, really, which is frustrating at the time, but actually really valuable. And one of their mantras is write code and talk to users. What I think they mean by that is get something launched really, really fast. So when we started Monzo, we raised a couple of £1 million pretty quickly from Passion Capital. I knew them from a previous business. And we embarked upon applying for a banking license, and we thought that might take us a year. And that felt like a long time. And actually it took us almost just over 2 years, which felt like a really long time. Even the year, though, was terrifying to us that we wouldn't get any customer feedback for more than a year. How would we know if we're totally wasting our time? And so we thought back to this Y Combinator mantra, like, how do we write code and talk to users? What is a product we can get into our users' hands as quickly as possible? MVP prototype that lets us start gathering feedback. And so it was, we started the company February 2015, and by about June, we were working on a prepaid card. I had the board deck where we said, we think this is a good idea. It's not a profit-making exercise. It's a customer development and market development exercise. We think we might get 5 or maybe 10,000 of these prepaid cards out if we're lucky, and the total budget will be £200,000. We ended up not getting 5 or 10,000, but 500,000, and ended up probably spending £15 million on that endeavor.
Wow. What did you take to passion to initially kind of do that pre-seed round?
This very clear vision of a marketplace bank, of a platform that helps control all of your money, that becomes a single interface. That idea, that sentence even, was it. Mm-hmm. And we just spent hours with the partners. They instantly got it and said, yes, we believe this has to exist. We don't know how to get there. We'll back you lot to try and figure it out. But they were really, really excited about that vision, that mission, this idea that you have a control center for your money rather than managing 15 or 20 disparate financial products.
In retrospect, what had you accounted for in your early planning in terms of, I don't know, technical complexity of what you were setting out to do, or the headcount requirements, or the regulatory, difficulties, and what came as a complete surprise?
So we budgeted £40 per user acquisition cost, which we haven't spent any of, really. I think in our original business plan, it was said we'd get to 750,000 customers after 5 years of sort of being live as a bank. We got to 1 million in just over 1.5 years. The cost to run an account has come down dramatically from what we forecast. Basically, initially we thought we'd rely on a bunch of technology providers. Luckily, the prepaid card gave us enough signal to think, we kind of want to build this in-house, actually. So we invested a lot of capital up front in building a card processor and building a connection to faster payments. We've built a ledger, all the customer kind of relationship stuff. We've really built it all in-house from scratch. Back in 2015, the regulator hadn't yet approved the use of cloud infrastructure, I don't think, for a bank. So we were budgeting for data centers. That's now gone all cloud. So yeah, a lot of costs have come down. The customer numbers are much higher, and the revenues have been a little bit slower. So it's it washes out.
Yeah. What was part of the? I mean, was kind of the thinking early on? Was it like, we're going to build our own stuff? It's going to be much better, cheaper, faster to develop, deploy, and at the end of the day, it's just a ledger, right? So, it's like a spreadsheet or whatever. That shouldn't be very hard to put together. Yep. And now it's, however many 100 engineers in central London supporting this. Was the expectation that you would very quickly kind of grow to the size of organization that you have now with the engineering power that you have? Or did you expect the engineering challenge to be simpler?
No, the engineering challenge has been about as complex as we thought, which it is not trivial, but it's not of the same technical complexity as building a self-driving car, for example. That is a different category of problem. I think what we've built is innovative and disruptive, and is miles better than anything else out there. But at the end of the day, a bank, as you say, is a list of debits and credits which sum to a balance, and that's a ledger. And you plug into payment schemes, and you convert whatever weird format they have into just a credit or debit. To be honest, most of the work is the compliance and assurance. It's not actually writing the code. We can typically get code written for a new scheme in a week or two. The compliance might take 4 to 6 months. So we got pretty good at compliance and assurance as well. But yeah, the technical complexity is, it's the black swan stuff that you never know how hard to kind of think about. It's the stuff that doesn't happen every single day, but if it did happen, it kills you. So those are the things we really, really spend time on now. Things like IT operational resilience, fraud, both internal and external, and cybercrime, generally speaking. Those are kind of the big black swan events that could really, really hurt or kill the company.
Sure. To what extent had you considered the unit economics of the business before setting out? I mean, there's so much talk about kind of how much detailed analysis should or shouldn't be done versus gut feel, and they're very successful businesses kind kind of come from both camps. I'd be curious what your experience was like.
Yeah, we thought about the unit economics of the current account quite a lot, but not the prepaid card. And it was the prepaid card unit economics that really stung us, especially when multiplied by this hyper growth that we didn't really expect. That's like a double whammy. And we made a bunch of product decisions on the prepaid card really early on without fully kind of thinking those through. And probably honestly weren't fast enough to course correct. So things like foreign ATM withdrawals. When we started out, our first 10 or 20,000 users used ATM withdrawals very reasonably. Cost us £4, £5, £6 a year, not a big deal. We then got featured on Money Saving Expert as a great travel card, and we had a very small minority of users who were taking out tens of thousands of pounds in cash abroad for their trip to Barbados and incurring hundreds of pounds in costs, which we hadn't budgeted for. And when we saw it, we probably didn't react quickly enough to just cap it and sort of move on. Similar with the debit card acquiring costs, the ability to load your card with another debit card, we pay interchange and card processing fees there. We're literally putting billions a year through, and that amounted to probably more than we spent on the core banking system we spent on card acquiring. So yeah, I think we could have maybe been smarter about that.
Yeah. What does product market fit mean for Monzo, if anything? And I don't know, maybe a related question. At what point did you know it was going to work? Like, at what point was like the hypothesis of, people want a different type of relationship with their money? Was there a moment in time or a metric or something that clicked and said, okay, actually, like, now let's really run with this?
Yeah, it was the first 1,000 or 2,000 cards, prepaid cards we gave out. We made everyone come to our office and load £100 onto the card and sort of listen to me give a talk about why we're here and that we needed the help, and it was an iterative process and actually apologize, right, and kind of set expectations really, really low that you're helping us develop a prototype. Do not rely on this yet, it's not ready. And the first 2,000 or 3,000 cards were really, really buggy and didn't work sort of 20% of the time or something. And we got tons of great feedback and very, very quickly, in the course of probably 3 or 4 or 5 weeks, fixed almost all of the bugs. And we knew we had the early signs of product market fit when the demand for cards was more than we could physically post out. And we'd have everyone on deck, like stuffing the cards into envelopes to post out by a mail deadline because there was that much demand. Like, literally, your customers are trying to buy your product faster than you can ship it out, I think is a pretty good sign. Having said that, our product was probably, we're selling £10 and charging £9, so that fuels some demand.
Yeah. That's interesting. How much of that do you think was, oh my God, I need this product to solve a problem that I have? And how much of that do you think was, wow, like, this buddy of mine just told me how cool this is, I want to give it a shot. Anyway, it's free, I've got nothing to lose.
Yeah. It's an investors ask us this sometimes, sort of, what is your USP? And what they're looking for is this kind of single economic silver bullet that explains why people use a product. And with Robinhood in the States, it's free stock trading. Stock trading, but there's no fee. Okay, great, I'll jump on board. With Monzo, there isn't a single economic silver bullet, but there is overwhelmingly a rationale, which is, my money used to cause me stress and anxiety. Now I feel like I have visibility and control. And those two words, visibility and control, come up again and again and again. And just things like instant notification, budgeting controls, sort of the summary, all this stuff gives you this feeling of peace of mind, of visibility and control. And whilst that is not an economic benefit, it is a very real benefit for people emotionally. So I think there is the big part of that. But also, the second point you mentioned, a shared belief in mission and vision and values. One of our earliest marketing straplines was, come and help us build the kind of bank that you'd be proud to call your own. Like a real call out to people's values and emotions and sense of right and wrong. I think that's something we've really tried to foster and live to.
What's your number one piece of advice for someone starting a company?
The best way to learn how to start a company is to start a company.
Love
go
it.
And do it.
Love it. Tom Blomfield, thank you very much for joining us today.
Thanks, Will.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.